Welcome back to the Crypto Hangout, where we talk all things crypto 7 days a week. Before you watch the video, take a second to hit the like and subscribe button. Help us reach 100 subscribers by December. Thanks for clicking. Enjoy. What's going on, everybody? It's Crypto Crane. I'm here. Today is August the 17th, 2021, and we have some crypto news for you today. I got quite a bit of crypto news. Quite a bit of news in today's show, so we'll go ahead and go over. We have travel crypto platform offering travel with crypto, so we'll dive into that article, see what that's talking about. We also have alt season. Some analysts suggest that alt season is here, so we'll dive into that and see what he's saying as well. Then we have a semi-fungible token, which I've never heard of before, so we'll delve into that and see what a semi-fungible token is, something new. So we have lawmakers urging CTFC and SEC to form joint working group on digital assets, so we'll delve into that article and see exactly what they're talking about with that. We have some news on Ramp and PayPal over for Europe. We also have some Twitter news. Twitter is appointing a crypto developer as head. We also have NFT news. NFT surging 8x as penguin and apes have dropped over the weekend. 32,000 Ethereum have been burned since the EIP 1559 activation. So we'll delve into that article and see what the effects of the EIP 1559 activation has done to ETH. 32,000 Ethereum burn, worth 100 mil. So, we also have Blockstream Energy. We'll delve into that and see what type of energy they are providing for miners. And we have the Fed's Neil Kashkari says that crypto is 95% fraud. So we want to see what this idiot is talking about. Crypto is 95% fraud. So we'll delve into that as well. And then last, we have ALCHEMY Pay joins with Visa and MasterCard. And we'll see what the news is on ALCHEMY Pay. All right, so thanks for tuning in, you guys. Go ahead and hit the subscribe button. If you guys hadn't subscribed, go ahead and find us on Twitter. If you haven't followed us on Twitter, there's our Twitter right there. And we'll go ahead and get into the news. All right, travel is opening, and so are your opportunities to travel around the world. Crypto lending platform is giving away an around-the-world trip and other traveling-related prizes to new and existing users. Countries worldwide have slowly begun to open up borders, which means summer travel plans might be on. UHudler, the EU-based fintech platform, has announced a crypto journey giveaway to help their platform users get back into the travel spirit. Participants will have the opportunity to win grand prizes, including two round the world tickets from One World Alliance, a 4-month Inspirato pass for hotel subscriptions, and a brand new 13-inch MacBook Pro. These prizes are in addition to a weekly NFT giveaway from the artist Fractality, as their digital nature suggests. UHudler can send NFT prizes to any address around the globe. Team members from UHudler show that promotions like this one are a major component of the mission to connect the traditional finance world with a new digital economy. The giveaway of NFTs further solidifying the bridge between digital art and physical representations of it. So, UHudler platform is giving away 2 round-the-world tickets to 2 lucky winners. So that's the platform. What is a semi-fungible crypto token? Fungibility has been a consistent theme of 2021, following the meteoric rise of NFTs. But what's the deal with semi-fungible tokens and how do they work? The interest surrounding non-fungible tokens reached astounding levels in the first half of this year. Data from non-fungible showed NFT sales surged to over 2.4 billion in the first quarter, 20 times more than the previous 3 months. That momentum has shown no signs of slowing so far in the second half of the year, with the leading Ethereum-based NFT marketplace, OpenSea, experiencing a record high trading volume of 49 million on August 1st, up from its average daily average trading volume of 8.3 million. The average price of CryptoPunks, one of the first collections of NFTs to make their debut on Ethereum's blockchain, also set a record during the same month of 66.919 ETH per NFT, about 220,000 at press time. The explosive growth has kickstarted a new wave of innovation around non-fungible assets, including the emergence of a new type of semi-fungible token, SFT, that starts off fungible and becomes non-fungible. Let's break down these terms. The majority of crypto asset investors monitor and trade on a regular basis are fungible, i.e. they are easily interchangeable. For example, if two people exchange one ether for another, there would be no loss of value and neither party would be better off than the other. That is because there is no value distinction between any two ether or any two Bitcoin for that matter, excluded tainted coins, coins that have been previously stolen or used in illicit activities. Fiat money like US dollars are also fungible. In other words, fungibility is the ability of a token to be exchanged or replaced with other tokens of the same type, resulting in no change in value. Non-fungible tokens. NFTs are blockchain-based tokens that can be used to represent digital ownership of something unique and scarce, such as artwork, collectibles, in-game times, soundtracks, or virtual real estate. Because each item has a distinct value based on inherent characteristics like who created it or how rare it is, it means NFTs cannot be mutually exchanged like Ether or US dollars. For example, a digital baseball card couldn't be exchanged one for one with a plot of virtual land. There are two completely different assets. Not to mention, the digital baseball card may be part of an exceptionally rare collection, and the plot of virtual land could be in an undesirable location. Because NFTs are stored on a blockchain, it means each token has the following characteristics: indivisible, indestructible, immutable, verifiable. So what are semi-fungible tokens? SFTs are a relatively new group of tokens that can be both fungible and non-fungible during their life cycle. Initially, SFTs act like regular fungible tokens in that they can be traded like for like with other identical SFTs. For example, a token that represents a valid $10 Amazon voucher would have the same value as an identical voucher with the same expiration date, and would therefore be interchangeable. The distinguishing factor that makes these skeptical types of tokens semi-fungible is that once they're redeemed, the fungible token loses their face value. That loss of exchangeable value makes the expired tokens non-fungible. Another way to understand this is to imagine owning a token that represents a concert ticket to see the Beatles' last ever performance. The ticket would have a face value and could be exchanged for another identical concert ticket, provided it was the same band on the same date and in the same seating area. Once the concert ended, the token representing the ticket would then become collectible memorabilia and have an entirely new value. It would also mean that the token could no longer be exchanged for a valid concert ticket of the same initial face value to see a different band. That process of transforming it from a fungible to a non-fungible token upon redemption is where semi-fungible tokens get their name. So interesting. So these tokens are pretty much where NFTs that actually have a function, for instance, like a function as a ticket or whatnot, and that becomes a collectible. So this could be big right here. Actually, I know this is going to be big. So Twitter-backed Blue Sky appoints crypto developers head. According to TechCrunch, Graeber has been playing the insider role in the new entity, which is wholly funded by Twitter and managed by the firm's employees. Part of Graeber's early tasks included the creation of a technical review of the decentralized social ecosystem for a working group of developers in the space. Graeber's previously experienced dates back to the Zcash cryptocurrency project, in which she started as part of the core developers for the privacy-focused digital currency. She also floated a firm on her own, Happening, a decentralized social network startup that was a decentralized social network startup that was targeting and challenging the dominance of Facebook events in the event booking world. As announced by Graeber on her Twitter page, her initial priorities would be to hire a team to kickstart the Blue Sky initiative. And this is her tweets yesterday regarding the Blue Sky network in her new position. According to TechCrunch, some of these roles will include a protocol developer and web developer. The advent of the World Wide Web ushered in a whole new possibility for digital innovations. The emergence of pioneering social media outfits like Facebook re-engineered social interactions in a way that brought the world together as one big global village. The original design of the internet is to decentralize information and data ownership, albeit the tech innovation has fronted the emergence of organizations that largely controls world traffic. Decentralized is out of the window, and today platforms like Facebook, Twitter, and Instagram, amongst others, dominate the social media scene. And this firm determines the content allowed on the platform. So let's see how Twitter will push the growth of Blue Sky. A major hurdle that Graeber experienced with the launching of Happening was in finding the right users to bootstrap the new platform. The Blue Sky initiative is poised to overcome this challenging drawing on the large user base from the Twitter ecosystem. The really powerful thing about Twitter doing a decentralized protocol move is that you could design a protocol that works in an ideal way. You don't have to go through the initial effort to find the niche to bootstrap from because Twitter will bring so many users, Graeber told TechCrunch in an interview. The primary goal of the Blue Sky initiative is to onboard Twitter and other social media platforms as clients. The goal has been noted by Jack Dorsey as complex and unprecedented, with expectations for it to take years to build. So that's interesting. We'll see how that turns out. Looks like we'll have to wait a little while for them to actually build that up and see how it turns out. Nearly 32,000 Ethereum worth 100 million burnt post EIP 1559 activation. Ethereum burning goes strong past post EIP 1559 activation last week. So it's been a week since the Ethereum London hard fork and the popular EIP 1559 fee burning activation. As per the data by Ultrasound Money, nearly 32,000 ethers have been burned so far, worth a staggering 100 million. The EIP 1559 activation has introduced a base fee model along with the ETH burning process. Thus, the transaction fee that once went to miners now goes into the burning process through the issuance of burn blocks. Once the amount of burnt coins exceeds the issuance, the Ethereum blockchain will enter a deflationary cycle. With the EIP 1559 activation, there are over 800 deflationary blocks on the Ethereum blockchain network. Interestingly, data shows that the EIP 1559 implementation hasn't much affected the miner revenue much. Data from Coinmetrics shows reduced revenue from transactions has no significant impact on total miner revenue. In fact, post the EIP 1559 activation, the Ethereum mining revenue is up 7.1%, hitting a 2-month high. There could be many reasons for it. The bullish outbreak in the ETH price over the last 2 weeks could be the reason behind the revenue surge. Speaking in CoinDesk, Anand Gomes, co-founder of crypto trading platform Paradigm, said London is driving this activity and mostly institutional. Gomes added that the ETH options market had witnessed an ultra bullish flow. As per data on Paradigm, there's a bull call spread for 40,000 to 50,000 strike price expiring in March 2022. Interesting. Blockstream Energy could let Bitcoin miners set up anywhere there's a power source. Bitcoin and blockchain infrastructure company Blockstream has introduced Blockstream Energy, its new service for energy producers to sell excess electricity to proof-of-work miners. Combined with connectivity provided by the Blockstream satellite, the new service is designed to expand the potential reach of Bitcoin mining to renewable energy sources, even in remote locations. Blockstream Mining provides Bitcoin mining equipment to institutional and enterprise customers. It also offers hosting services where it deploys mining equipment and then turns over full control of the rigs to the customer. Blockstream Energy utilizes modular mining units, which are essentially independent mining facilities that can be operated remotely. Power producers like turbine or nuclear power plant owners can sell energy to the operators of these MMUs that otherwise would have gone unused. For the first time, energy producers can control and scale demand to meet their supply. This incredibly powerful tool can be used to make existing electrical grids far more efficient, while also significantly improving the economics of renewable energy projects, said Chris Cook, CIO and head of mining at Blockstream. Energy producers can use Blockstream MMUs for a variety of purposes, including balancing electric grids and providing carbon trading strategies, and improving carbon trading strategies. Since MMUs can be shipped globally and are plug and play, many renewable energy mixes can fuel them. Blockstream deploys these MMUs to energy production sites in order to enable scalable and dynamically adjustable energy demand. Crypto is 95% fraud, hype, noise, and confusion, said Fed's Neil Kashkari. Minneapolis Federal Reserve President Neil Kashkari on Tuesday had some harsh words for the nonsense crypto asset market. The central banker said he doesn't see any use case for Bitcoin, the world's #1 crypto, and referred to the broader digital asset sector as one of the largely tied to fraud and hype. Cryptocurrency is 95% fraud, hype, noise, and confusion, Kashkari said, speaking at the Pacific Northwest Economic Regional Annual Summit in Big Sky, Montana. So we'll see what you know. It's funny that all these Fed guys and SEC coming out calling crypto fraud, and I'm willing to bet they have some ties back to these banks that don't want people to get crypto and don't want to lose a hold on the people and controlling their money. It goes on to say that Kashkari also offers some of his views on monetary policy plans, noting that he still sees a lot of slack in the U.S. labor market and suggests that he might need a couple of more strong job reports before he's inclined to support and push a scale back the central bank's monthly purchases of $120 billion in treasuries and mortgage-backed securities. Alchemy Pay launches virtual crypto cards in partnership with Visa and MasterCard. The Alchemy virtual crypto-linked cards are currently under beta testing. The full-fledged launch will happen by the end of this year or early 2022. Side note. On Monday, August 9th, the world's first hybrid crypto fiat gateway, Alchemy Pay, announced the launch of its virtual crypto-linked cards. This move from Alchemy Pay also seeks to accelerate crypto adoption in the payment sector. As per the announcement, Alchemy's virtual crypto cards will support over 40 digital currencies. Furthermore, they can link to digital wallets such as PayPal and Google Pay. Now that's big. Wow. So, yeah, I can see the price of Alchemy Pay going to skyrocket if they're linking to PayPal and Google Pay. Yeah, so Alchemy also noted that its virtual cards would be accepted by millions of merchants via the Visa and MasterCard network. Besides, it would also work on popular e-commerce platforms like eBay and Amazon. Alchemy also noted that its virtual crypto-linked cards are undergoing beta testing on multiple networks. Thus, the full-fledged launch of its virtual cards will happen either by the year-end or early 2022. The crypto-linked card transactions have picked up pace recently as more financial players join the crypto market. To further drive adoption, Alchemy Pay is willing to offer a full suite white label service for businesses and cryptocurrency-related projects. It will also offer these services to traditional institutions looking to integrate crypto-related solutions. Ramp, aka PayPal for crypto, wins registration with UK's FCA. Ramp, in its bid to make cryptocurrency accessible to everyone, has achieved another milestone. Its PayPal for crypto service has won the FCA, i.e. Financial Conduct Authority, registration. This crypto payments infrastructure setup is the 8th firm to secure this status with the UK's financial services watchdog, at a time when there is a growing regulatory burden on the crypto industry, leading to as many as 64 crypto-based firms canceling their FCA registration plans. FCA has proven to be a trustworthy payment services firm. What does Ramp offer? So let's see. Ramp offers customers what other crypto exchanges and startups do not. It provides brands and partners crypto-enabled services within their payment models to make crypto transactions easier. A large crypto consumer base conducts their daily trade and transactions through exchanges like Coinbase and are enthusiasts with market knowledge about the digital assets. However, Ramp comes to the rescue to help exploit the true potential of crypto. It offers a decentralized, non-custodial full-stack payment infrastructure, aka a software development kit. The SDK can be integrated with the client's app or wallet, thus enabling their customers to engage in crypto-enabled services. Additionally, the client doesn't need to go through the hassles of getting certifications or licenses, as Ramp would facilitate these crypto transactions on the client's behalf for the end customer. The startup brands itself as PayPal for crypto, as it wants to have the same impact with respect to digital assets, like how PayPal has transformed the payments ecosystem across e-commerce and online businesses. Ramp's goal is to provide a similar level of infrastructure to their clients. This will not just help crypto enthusiasts, but also prove to be as seamless for a non-crypto customer. Analysts say this key metric suggests an altcoin season is at hand. A series of new all-time highs from altcoins and a drop in the Bitcoin dominance metrics has many analysts convinced that alt season has started. Bitcoin's 65% recovery from sub 29,500 on July 20th to a swing high of 48,200 on August 14th took less than a month and helped bring fresh bullish momentum back to the crypto market and to traders who were dreading the prospect of another prolonged bear market. Currently, the BTC rally has stalled out near 46,000 price level, and this phase of sideways trading is giving altcoins an opportunity to step forward. As shown in the chart below, the total market capitalization of the altcoin market has risen 80% since July 20. Meanwhile, the Bitcoin dominance rate is down 10% since July 30th. U.S. lawmakers urge CTfC and SEC to form joint working group on digital assets. The letter seems to be applying political pressure for the two government agencies to act on their own, rather than waiting for a bill requiring the creation of such a group to become law. In a Monday tweet, Representative Glenn Thompson said he had submitted a letter with Representative Mark McHenry to the CFTC and SEC urging the agencies to establish a joint working group on digital assets. Thompson and McHenry requested SEC Chair Gary Gensler and Acting CFTC Chair Rostin Benham to promote an active dialogue between federal regulators and participants in the crypto market. A working group on digital assets would enable both the SEC and CFTC to explore how to effectively use their current jurisdiction cooperatively, said the letter. Such a working group can foster transparent engagement with innovators in the digital asset ecosystem. As Congress contemplates additional legislation to address regulatory gaps, this could provide us with additional information and clarity as we make these important policy decisions. NFT Trading Surges 8x as Penguins apes drive new boom. Art dealers were agog at the NFT frenzy earlier this year. They should have a look now at the trading volumes on OpenSea platform. Trading in non-fungible tokens, or NFTs, is soaring to multiples on the levels seen earlier this year when the phenomenon burst into public consciousness with breathless headlines in mainstream media and gasps among art dealers. The number of sales on OpenSea, the largest NFT marketplace, reached more than 60,000 per day over the past week, nearly 8 times the peak in March, according to a report by crypto intelligence firm Coinmetrics. According to another data tracker, DappRadar, OpenSea's trading volume over the past 30 days was 1.22 billion, up 933% from the previous 30 days. Such growth suggests that the hysteria epitomized by the artist Beeple's 69 million sale of his work every day, the first 5,000 days at Christie's, may have merely represented a glimpse of the industry's potential. If NFTs start gaining as much outside attention as they did earlier this year, there may be an even bigger boom yet to come, wrote Coinmetrics. So yeah, NFTs have been booming, and they will continue to boom, and most in part because of the play to earn games. They are NFT based and NFT driven, and that is mostly driving the boom. As far as that, with that and the CryptoPunks and the Degenerate Apes, you have the Zed Run NFTs, you have the Rev Racing NFTs, the Formula One NFTs, and you can all play those, the last 3 that I mentioned, as a game as well. So that will conclude today's news for August the 17th. If you have not, go ahead and like and subscribe to the channel. Help us grow the channel. We're trying to get to 100 subscribers by December. And go ahead and follow us on Twitter. And our Twitter will be popping up here soon. We do post up-to-date news on Twitter as well. Sometimes we post plays on Twitter as well. So that's all the news I have for you today. Thanks for tuning in. Thanks for subscribing. Thanks for joining and being part of the community. You guys have a good night. Peace out.